Money decisions aren't made in a vacuum. Your brain is constantly working against you, filtering information through mental shortcuts that kept your ancestors alive but now sabotage your financial future. These cognitive biases are hardwired into how you think, and they're costing you thousands every year. Understanding them is the first step toward breaking free from patterns that keep you broke. Anchoring bias locks your perception to the first number you see. When you hear a stock price was once higher, or a house listed at a certain value, that figure becomes your reference point even if it has no bearing on current reality. You chase that anchor instead of looking at fundamentals. Investors do this constantly, holding losing positions because they remember buying at a lower price, unable to accept the new reality of what something is actually worth today. The sunk cost fallacy convinces you to throw good money after bad. You've already invested in something, so you keep investing to justify the original decision. That gym membership you never use, the business that's hemorrhaging money, the relationship where you keep spending hoping things improve. Your brain tells you stopping now means admitting failure, so you keep paying the price long after reason says to walk away. Overconfidence bias makes you believe you're smarter than the market, smarter than professional investors, smarter than the odds. You're convinced your pick will outperform, your timing is perfect, your risk assessment is accurate. Studies show that more than 90% of people rate themselves as above-average investors. This delusion leads you to trade too much, take on too much risk, and ignore warning signs because you're certain you know better. Loss aversion hits twice as hard as gain. Losing $50 hurts more than finding $50 feels good. This asymmetry paralyzes you. You hold on to losing investments hoping to break even instead of cutting losses and redeploying capital. You avoid reasonable risks because the possibility of loss feels intolerable, even when the potential upside far exceeds the downside. Fear dominates your financial decisions more than opportunity ever does. The availability heuristic makes recent events feel more likely than they actually are. You remember the stock market crash from the news, so you think crashes are imminent. You hear about your neighbor's real estate success, so you think property investment is foolproof. You overweight vivid, memorable examples and underweight statistical reality. Your portfolio decisions get shaped by whatever is loudest in the media, not by actual probabilities or your actual situation. Herding behavior turns you into a sheep. When everyone around you is buying cryptocurrencies or tech stocks or jumping into real estate, your brain interprets that crowd movement as safety. Surely this many people can't be wrong. But markets peak when everyone is convinced, when the herd is fully invested and believing their own story. You pile in at the top, sell at the bottom, and wonder why you're always buying high and selling low. Confirmation bias lets you see only what you want to believe. You cherry-pick data that supports your existing thesis and ignore contradicting evidence. You want to believe in a particular investment, so you remember the reasons why it was good and forget the reasons why it wasn't. You construct a narrative that confirms what you already think, then use that narrative as proof that you were right all along. The illusion of control makes you think you're steering the ship when you're mostly just along for the ride. You believe that staying active, trading more, researching harder, and adjusting constantly actually improves your results. In reality, most people who trade frequently underperform those who simply invest and hold. Your activity feels productive, but it's mostly just friction and fees depleting your returns while your ego gets a hit of false accomplishment. The path to real wealth isn't more complicated, faster, or smarter than what works. It's the opposite. Wealth builds through boring consistency, through resisting the urge to do something, through recognizing your biases and building systems that override them. You can't eliminate these mental glitches, but you can acknowledge them and create structures that protect you from your own worst impulses. That's where actual financial freedom begins.